Hi, and welcome to Inside View. I'm your host, Joel Metzger, and joining me today is Barbara Sullivan, who is the Calaveras County Treasurer Tax Collector. Welcome.
Hello, Joel. Thank you for having me.
Well, it's my pleasure to have you back for the second time. The first time we talked, you had recently won an election, which I imagine was a new experience for you.
Most definitely, yes.
And I don't even remember, were you against a bunch of people, or was it just a two-person race?
Yeah,
or?
it was me and another gal that had ran against me.
Okay, and how did that turn out in terms of percentages?
I won 71%.
Oh, so you owned it.
Yeah,
okay.
but you'd never know. You don't know until the bottom line.
That's right.
So
it wasn't like you weren't nervous a little bit going into it
oh,
and
yes.
all that stuff?
Oh, yes.
Okay.
Yes, it's something I've never experienced, so.
Yeah. So just, you've been in the office for, is it 2 years now then?
It's been 3 already.
It's been 3.
Right, and
okay.
this coming spring we'll run again for office. So.
And do you plan to run again?
Yes.
You do?
Yeah.
Okay. How's it been?
It's been great. I think really anybody going into an elected office, it takes time to get in there and feel the position and understand what's going on. Even though I was the assistant in the department, I didn't do a lot of the jobs that the tax collector does or the treasurer, like investing and stuff like that. So, no, it's been interesting. I've really enjoyed it.
Okay. So was there anything that really surprised you that you really had no idea you would be facing as the head of the office?
No. It was all a surprise, and it's like every day there's a new experience, because I always try to do something new and get the system, I guess, up and running more smoothly and something more unique. But we do have R&T code that keeps us under wraps on what we can do. But no, it's been not that challenging. It's been very interesting.
Well, good. I'm glad you're liking what you decided to take on. Before we go into the ins and outs of kind of the two sides of your office, tax collector and then treasurer responsibilities, I wanted to let people know a little bit more about your history. So where did you grow up, first of all?
I was born and raised in the Bay Area, over in Hayward. Basically lived there for probably 21 years, first 21 years, and started moving out of there. I've worked in all professions, and accounting was my background. So I've worked at a hospital, I've worked for growers, I've worked for different types of industries, leading up to coming to the government when I moved up here 31 years ago. So I started looking for a job closer to home, got one here at the auditor's office, and that's where I started my profession at the county.
So you had moved up here, but you were still working far away?
Well, no, I kind of moved, like from San Leandro, Hayward, I moved out to Tracy, Pleasant. I kept moving out further and further. So for the next 5 years, that's where I ended up after 21 years. So I was 24 when I moved up here, basically.
So as you kind of migrated your way away from the metropolis, what led you to Calaveras County specifically? Or
basically, I had the mountains and the mother lode. Just, you know, it's beautiful. We have the lakes, the scenery. I loved it up here. So we were looking for retirement property and ended up retiring, but not. So we had a place and we started moving, you know, all our stuff up here. And I worked originally down to Ripon every day at Franzi Winery.
Oh.
Yeah, I worked there for 11 years. So that was my first taste of working out of the Bay Area. So, but you know, it was a great move. It was the best thing we ever did. So.
What part of the county did you settle in?
Valley Springs.
Valley Springs.
Yeah.
Is it like Rancho area?
Yes,
or?
Rancho Calaveras.
So you have property and stuff?
Yeah, we have an acre.
Cool.
Yeah. So,
cool.
Yeah, I know, I like it.
So you said you like the mountains and things, but when you're not doing your duties as an elected official, what would be like some hobbies that you enjoy when you're out and about?
Gosh, I love traveling. This year we hope to go to Italy.
Oh, cool.
Yeah, and maybe Ireland. But I like to travel. My husband likes the ocean, so we end up usually taking a nice vacation somewhere just to get away. Yeah. But other than that, I just like staying around, being with family and friends.
Yeah, for sure. So, it's a beautiful place to live.
I know, I love it up here.
Yeah. So you decided it's good to have a job a little closer. You're still commuting a ways. You have a nice home in Valley Springs. And what kind of attracted you to the auditor's office in the first place? Just did you have a skill set that matched what they needed, or?
Well, originally, when I moved up here in my 20s, I told my neighbor that someday I would be the treasurer tax collector.
You did?
I don't remember saying that, but to this day she makes me and reminds me that I said that, which is interesting. So, but anyway, yeah, no, I knew my skills in accounting and auditing. I had really, honed in on those skills when I was at other places. So when they had an opening in the auditor's office, I went there, and that was perfect. I was there 4.5 years before there was an opening in the tax collector's office.
Okay.
Yeah, and then I moved into there. So I was glad I was able to stay, because government work, once you know codes and you know how it runs, it's very beneficial to keep somebody like that. and I know that now.
No doubt. So you kind of worked your way up in the Treasurer Tax Collector's office to being like number 2, basically?
Yeah.
Okay.
Yes, I was Lynn Norfolk, our old tax collector.
Long time.
Yeah, I was her assistant for 4 years.
What's she up to these days?
She's enjoying retirement and her grandbaby. She's doing really good.
Good,
Yeah.
good, good. Okay, yeah, I remember
Yeah.
her well.
I see her quite often. We have lunch and
Good.
get to visit once in a while.
Does
so
she
it's
say
good.
you're doing a good job?
I think so.
Okay.
We don't really talk about that. So yeah.
Okay. So then it comes the time when Lynn retires, and then there's this opening. Did you kind of know for many years that you would go for it when the time came, or was it something you really had to kind of think about at the time?
I was so happy working with her, and I appreciated her knowledge, and I enjoyed working there that I never thought that I would be running for office. I mean, getting hired by another company, you get hired, you get the position. So that was a big step for me. So it took me a while, but when it set in that I was the right person for the job, because nobody's going to walk in and know it, that's when I said I just had to do it, had to go forward. So it was pretty stressful because I'm not one of those public speaking type individuals. So it took a lot for me to get up there to do that.
Yeah, you're probably not one of those people who goes on TV shows either, are you?
No.
No, definitely not. Okay.
No, not even for Wheel of Fortune. No.
So you had, a different experience, a new experience, a challenging experience running. You ended up winning and you've been in the job, but now you're looking at doing this again. Do you have any inkling as to whether you'll be facing someone or not at this point?
I don't know.
Okay.
I don't know. That's you never know until that day comes where they file their papers over in the.
But no one's done that yet, as far as you know?
No.
Okay. Okay. And when would the election year be? It wouldn't be this coming. Would it be this coming spring?
Right. This will be when the election is.
Okay.
And then it's the end of the year that it ends, and then the new term starts at 15.
Okay,
Yeah.
gotcha.
Yeah, I
Wow.
know.
We will just have to hold our breath and wait and see.
Yeah, I hope so. I hope everything works out.
Yeah. So this job that is so coveted that you have right now, what is the description for people who've never heard of it before? What is it that you do?
Well, there's a lot of banking involved because when you think of the outside, again, private sectors, there's banking, there's collections, there's investing. So you're like a broker investor type situation. There's a lot that goes on. So you have to know the ins and the outs of how to do number one, investing, which if anybody gets the job, it's really not your expertise. My background was accounting. So we hire a firm that does that, and that's their background, and they're safe, as far as how they invest. So it's called Chandler Asset Management. They're very good.
And I imagine they probably manage the assets of many different counties and things like that. Okay.
We're pretty small compared to some of them.
Oh, sure.
Yeah.
So like roughly, how much money do we have them manage for us right now?
Right now, I think it's at 51 million.
Okay. And is that money that it can ebb and flow based on the time of year, or is that kind of a set amount that is our investment money?
Basically, those investments are, I don't know how to explain it to, as things come in, they're up to 1 to 5 years as far as their terms on their maturity. So within that 1 to 5 years, you have continuous agencies coming available, treasury notes, that type of thing. So that's always coming in and going back out. So it's a flow, it just keeps going. We don't go any further than 5 years.
Okay.
So.
Okay. And would that be more under the treasury side of your job then?
Most definitely, yes.
Okay.
Yeah, the tax side is basically what it is. The taxes are all about the collection, transit occupancy tax, I think we had mentioned, and the 6 tax rolls that there are. They're secured, unsecured, delinquent, secured, supplemental, unsecured, and supplemental secured. So each one has its own special purpose.
Now, is there any way to, for layman's terms, explain a little more about what that means?
Basically, everybody knows about the current secured, which is your property taxes that you get on your house for your secured property.
Okay.
And then the others, like a supplemental, would be if you were to change ownerships or make an improvement on the property, then there would be a value change, which makes the supplemental.
Okay.
The unsecured part comes in when it's a prior owner. So it goes from one owner to another, and there's a bill coming out maybe that isn't to the new owner, it was something that should have been to the last owner.
Okay.
Okay, that's that. And then unsecured taxes are usually business taxes and boat taxes, more of a personal tax.
Okay. So the vast majority of the taxes you collect would be
Property tax.
Property
Yeah,
tax.
that's the biggest part of the row.
And is that something that you keep track of, like once the end of the year is done and all those property taxes are collected, you would know kind of roughly how much you've gotten and give that to the Board of Supervisors or someone, or what do you do?
No, we don't give it to them.
No, I mean
That's
like
cute.
a
I like that.
report.
No, I understand. I
report, yeah.
understand. No, basically what happens is we call it apportionment. So anything that gets collected then gets divvied out
Okay.
to all the districts that are involved.
Okay.
And there's like 60 participants that get tax money, anywhere from a cemetery district that gets small amounts all the way up to the hospital and the schools, which gets the most.
So is 60 quite a lot of special districts, or are we kind
Yes,
of?
oh no, it's quite a bit, yeah.
Okay.
Yeah. Every county is different on how they established that when they went back to the rate, where they fixed the rate for the 1%. So in that 1%, it's not all county. 18 cents basically goes to the county, the rest goes to all the other entities.
How was that rate established, that percentage?
When I was in the auditor's office, I used to work with that, and I haven't worked with it since. But it goes back, and I don't know if it was Prop 13 or that one. I don't remember. I don't remember how they established that.
Okay. Let me see. I think I was talking to Rebecca Callan lately, and she said, you're right, it was Prop 13, and that whatever the historic history of how much the county used, and they really just used what they needed to before then you would kind of just be stuck with that after Prop 13, and then it was fixed.
I knew that's what the increment, okay, that's where it came from.
But what's weird to me is Calaveras, in a way, was penalized for being a fiscally conservative county and not taking, tons of that money, sort of a thing. Whereas other counties like Alpine, I think, are getting like 60 cents on the dollar.
Yes, get a higher,
Way higher.
yeah.
And even Tuolumne and Amador get more.
Right.
So
Right.
I think that's unfair to a certain
Well, it's amazing
extent.
because I over the years I thought it would have increased anyway, but we've kind of gone the opposite direction, with property values. But yeah, no, I always thought that would change, and it hasn't. I mean, it's roughly only maybe 1.5 cents difference from when I
Yeah.
started there.
And then of that 1%, do the school districts get a big chunk of it, or?
Yeah, they get almost 60% of it.
Almost 60%. So like 3 times the amount, more than 3 times than the county gets. That's interesting
Yeah,
too.
yeah.
Okay.
They're one of my biggest depositors.
All right. Yeah, for sure. But everyone kind of benefits or does not benefit from how much tax comes in. So that really affects everything. The general fund, and then all these special districts and
Oh,
everybody.
definitely. So when it got hit, when we had all the recession and the Prop 8s come in, where the values got lowered, that's where their money went. They were all hurting for that reason.
Yeah. But once again, you're really just taking instruction from what other people do, and you're taking the taxes, making sure that you collect them, and then you're taking care of that money during the time that it's within your control.
Correct.
And then are you making payments out to people as well then?
Basically, the auditor controls.
auditor
Yeah,
does
we have
that.
the checks and balances that way.
Okay.
Basically, I'm in control of what happens to that money as far as keeping it, and then she's responsible for making sure it gets expensed and put out, to the appropriate. So we have our checks and balances that way. And then when
Okay.
the checks come through, I reconcile them in our department.
Oh, you
Yeah,
do?
we do every check reconciliation that comes through there.
Okay, so multiple eyes, multiple departments are
right.
working together on
Right.
that. Okay.
Yeah.
How would you characterize the flow between different departments, like you and the auditor especially? Is that a smooth working relationship, or?
Oh, very much so.
Okay.
Yeah, very much. And it needs to be. And I know over the years you've had different people in charge, and I'm not sure because I didn't work as a department head then, but it's very important for us to work together because we are going for the same purpose and try to get the resolution being the same thing. We want it to work. We don't want it timely, things in a timely manner, and make it done right and make sure the funds balance and that everything's accounted for.
Yeah.
So we work very well together.
Good.
I think she would say that too.
I'm sure she will. So let's just do, for the viewers' benefit, kind of a walkthrough of a little tax scenario. So first of all, let's say I'm a homeowner. When would I be notified that I have taxes due? When does that go out?
Well, it depends. If you bought your house in October, it would be after the tax bills went out.
Okay.
So you would get a notice from the assessor saying we've received change in notice. But the normal process is around the end of September, beginning of October, the annual tax bills go out, which are due November 1st and February 1st. But because delinquent dates are 12/10 and April 10th, they usually think those are the dates that they have to have them in by.
So they see the delinquency date.
Yeah,
and
and
then
everybody
they think,
shoots for that date, which I can understand.
Okay. But the date you're supposed to do it
Is November, and yeah, but there's a grace period. That's a big grace period.
Yeah, yeah, for sure. Okay, so I get this tax bill, and then I need to pay it to you. It's property tax, and then a little bit for all these special districts and all that stuff. But if for some reason I didn't pay, then, and I go through the grace period and I still didn't pay, then what do you do when you see that I haven't paid that?
Okay, what we do is around February, we'll send out notices because that's when we realize that maybe the people missed it. But by law, we don't really have to send a tax bill. I don't know if you know that either. You're not supposed to, you don't have to have a tax bill.
You don't have to notify me that I...
No, it's up to you as a property owner
Oh,
to
I
know
didn't
that.
know
Yeah, just
that.
so everybody knows that.
Okay.
But anyway, yeah, in February, we'll send out a notice to kind of remind people. And then May, after the second installment was due, then we send them to the ones that are actually an annual delinquency, maybe a year delinquent, to tell them how important it is that they need to call us to set up a payment plan or contact us.
And just quickly, let me go back to the first and then second installment. You have a choice to either pay it in full or pay it in 2 installments?
Yes.
Okay,
Yes.
and what's the reasoning behind that? Just that not so much of a financial hit all at once, or?
Again, that's something that's been put in our R&T code for I don't know how long. It's
Okay,
been
so
there
it's
forever,
just
yeah.
one of those things.
And that's the only tax roll, besides supplemental, that will get split. Unsecureds are due within 30 days.
Oh, really?
So
Okay.
unsecureds come out in July and they're due the end of August.
Oh, wow. Now, are there any other ways where like you could be paying throughout the year so it's not so much? Or
Only
is
on
that
delinquent taxes.
only on delinquent?
Yeah,
Okay, so
yeah.
this is just the way it is?
Yeah, yeah.
Okay.
But at least there's that plan so that, and again, we try to get them on the plan. But it depends. It's hard for people sometimes.
Okay, so back to the scenario.
Yeah.
So I'm delinquent, and you said maybe wait a year or something until you notify me, or?
Well, the next set of letters gets a little bit more, okay, this is, concerning. Yeah, this is,
serious.
now you're,
Okay.
you've got a delinquency. We don't tell them in 5 years because at this point it's only a year.
Yeah.
But we keep after them annually, and if we have a correct address. When it comes time at 5 years, that's when it really
So this
becomes different.
continues
Up
year
every
by
year,
year
we
by
send
year.
notices out,
You're
yeah.
sending those notices, and then 5 years is the magic number in terms of bad things happening.
Yeah,
So
yeah.
talk me through that.
Yeah, at the end of 5 years, that's the end of trying to make a payment plan or open anything that you can to start payment. So at that point, we have to get busy and we start contacting all parties of interest on the property. So if somebody had a mortgage, the lender would be notified, everybody would be notified because they're going to lose that property.
Okay.
So that takes place. That takes about 30 days. Then those that have structures, I need to go make a presentation, to them and see them.
And then that's an in-person thing, or?
Yeah, in the past, we do hire an outside firm that does that because, as you can understand, the county is so vast and large.
Yeah.
But like this year, we had 82 parcels, which is quite a bit.
82 parcels.
82, yeah. Normally, we have up to 40. That's about 46.
Now, but there's a reason for the 82 parcels, right? Because 5 years ago from 2013 is...
The recession, yeah,
The
that's when it
recession.
hit. Yeah, we
Okay.
knew it was going to be big, and most counties will tell you they have doubled too. They have quite a few.
Okay.
So at that time, I go around and I'll try to visit anybody that has a structure to make sure that somebody living there knows, that they do have this tax bill and they will be up for sale. So that's the tough part. Nobody likes doing that, but I have to be proactive and I have to follow through with the government code.
Now, the payment plans, I'm skipping back again, I'm sorry.
I'm sorry, well, I may be getting out too on
Oh,
you.
no, not at all. It's just with the payment plans, what is like the minimum that you could start paying just to at least get yourself on some sort of a plan?
Okay, yeah, to open it, like I said, after 1 year, it's great. The quicker you get on it, the better, because the interest starts building at 18% per annum. So it's 1/5 the outstanding balance. Okay,
1/5.
1/5 would be due right at that time. Then we ask, pay whatever you can. If you can pay $20 a month, pay it, because that interest on 18% will just, that keeps compounding.
Yeah.
And then if they stay on track and they keep their current taxes current along with that, because they have to stay current, otherwise they're going to fall to it again and they're going to have to reopen it again and all their interest goes back on that they saved. Yeah. So we try to keep on them. We have these people's numbers. We try to, make an approach to them. So.
But when someone doesn't pay for 5 years with that interest on there, that must really build
Yeah, it does.
quickly.
Yes.
So you're looking at, like, what would be, how much have you seen in terms of back taxes on some of these properties?
Oh, gosh, it just depends. Especially during that time, 2008 was a time of where they were starting to drop, but then they weren't all being dropped because not everybody was asking for it to be reviewed on their property. So I had one over here by Rancho. It was $480,000.
In back taxes? Oh, my God.
So nobody's going to buy, I think it was 3 acres. Nobody's
For
going to buy,
480.
yeah. So what happened is these people had, I guess they invested money in the property back in 06, 07, and then it went through foreclosure, and that's how they got it back.
Oh.
So now these taxes, nobody ever bothered paying on the higher value was back then. So now it's been reduced. Now the assessor has reduced it, of course, but we can't go backwards. So next year I can offer it again, but I'll have to offer it at a lower rate if I'm going to get somebody to buy the 3 acres. But anyway.
So that's an extreme example,
Yes.
but you're looking at it from a special mentality when you're making this offering. You have one simple goal, which is I need to recover the taxes owed, right?
Correct.
So you're going to actually offer a property for the exact amount that you need in taxes?
Yes, by code I have to.
Okay.
Yeah, because that's all I care about that property is the defaulted taxes.
Okay. And while you said that people who might be in the market to buy these things, are you doing this on the courthouse steps basically? Or?
No, those are foreclosures. Only the banks do those type.
Okay,
Yeah.
so how would I buy a property that you are selling to get these taxes back?
Well, in the old days, they used to have an auction at the library. They would announce that they're going to have it through the board because the board has to approve it. But that was where you got a handful of the same people, and then nobody wanted to really buy anything. So we didn't sell too many. So then the internet, of course, came along real strong and heavy. So now everybody almost does all bidding and selling on the internet. It's called Bid for Assets. It's where we do it.
Okay. When are those listed during the year?
Ours is always November because we try not to do it during tax time or right at the end of close of the year. So we try to do it in November. Gives us time to find people by that time too.
Okay. And then someone would have to come up with that money.
Yeah, there's a minimum deposit to get to be a bidder because you have to be proved that you do want to put the money on there. So there's a minimum bid. Then again, due diligence. Everybody has to make sure that they research the property, see what's on the property. But basically, yeah, there's 4 days that it's open to that, and the highest bidder is the taker.
Do some of these get into bidding wars and it goes up way beyond what you first offered it for, or?
I don't know because I don't watch it. That's one thing I've never watched is how it's done. This year, because I went and visited some of the parcels, I was kind of more in touch with it.
Okay.
So I looked at some and I could see where one day, like the beginning day, nothing. But by the end of it, there was quite a few that had, all of a sudden they had, like over half were sold.
Oh, okay.
So yeah, there wasn't an astronomical amount, but again, I don't know what the value of the property should be. I don't know market value of it.
Because that's not what you're paying attention to.
Yeah.
You just want those taxes.
Yeah.
But as a buyer, you have to be aware of anything else that might be attached to this property beyond the taxes. That you could get a really bad deal, perhaps, if you
Right,
had-
and IRS liens are the main ones
Okay.
because any other tax lien takes precedence over us, but they have to come forward with it. So if there's one right now that has one, and they can come in up to 120 days and pull that sale.
Oh, really?
So even though I think I sold it, they can come back and get it. So, but that's never happened because they should have been involved already. They've been noticed.
Okay.
So that's the thing. That's the hard part because people think, oh my gosh, you waited till now, but no, we've been contacting these people. So.
And there could be a great deal to be had, but there certainly are a lot of things to consider. So
Yeah,
it's kind of
timeshares were a big, they were a mess. So we finally got down to one. I'm down to one timeshare left. Where I think at one time we had like 50 or 100,
Wow.
at least 50 or 100 each time we had an auction.
Oh my gosh.
So we're only down to one. We're happy.
All right. Very interesting that's one of the things that you take care of, and that you do actually end up selling properties. Just to humanize you for a second, and the fact that it's not just about getting those taxes. There was an example this year, I believe, where a disabled veteran, was involved in potentially having the house where he lives sold.
Yes.
And
yes.
so, how did you handle that?
Well, I made a call once I realized I saw he had a veteran's exemption on his property, and that's what got my attention. Because to have that, you have to be basically almost 100% disabled, at least 80 to 100. So I made a few calls to the American Legion up here because I know a couple of people. They got me a gentleman that lived down the street right from the gentleman, went to his house and got to speak with him, and he had no clue because the people living with him apparently weren't telling him, that
They weren't paying the taxes.
Yeah.
Okay.
So I'd say within 2 weeks it was paid.
So people came forward and
Yeah.
took care of that.
Yeah.
And that's not something you had to do, but you went kind of above and beyond to actually have a personal vested interest in
Yeah.
that.
Yeah.
Okay.
That's pretty close to my heart. I couldn't. So that's a tough one.
I wanted to have a chance to touch on one more topic before we run out of time here, and that is the fact that you've been working to kind of improve efficiency by being able to take credit, debit cards. Just credit cards or both?
Well, they like to do
Visa.
both because debit credit cards are kind of one
The
in hand with the
same.
same with the banks, but yet
Okay.
you have Visa, MasterCard, and those that are They're credit cards, basically.
So I guess
yeah.
first, why hasn't the county been able to accept these in the past?
Well, because we're a government agency, and right now the only credit cards we take is for taxes, and there's a 2.38% fee on that. So if people remember that, they can understand that we can't absorb the fee, so they have to take it, which some don't mind. But when it comes to a permit or a business license or an animal dog tag, they don't think, 2 seconds about, well, I want to use my card, because it's like a retail transaction. So I've been trying to get the transaction fee down lower. It was way too high. It was like $6.95 and up.
Wow.
And I think we're going to get it down hopefully to $1.95 to $2.95, which is a lot cheaper. But they have to understand they have to pay for it. And that was the hard part. And I think now people are ready to do that because they don't want to deal with checks.
So even now, even though that entire cost would be passed on, you think people would take advantage of the
Oh, yeah.
service?
Yeah, I think because convenience. We get people, I'd say 5 times a day at the counter want to pay for their business license with the credit card.
Okay.
So there will be some revenue for the credit card company, and that's how they can help us out.
And what would be the time frame on rolling this out potentially?
I'm hoping, because right now I got to present it to certain departments. I want to show them how it's done within their department. I want to make sure everything's in check before I just rapidly go get it and put them on a scanner. So probably about February. Probably,
Okay,
yeah.
so early next
yeah,
year.
we're getting there.
Right on.
Yeah.
Looking forward into the next year, I know we have a really ticklish budget coming up. So can you make any kind of a comment on what we might be looking at or when we would know more about this budget?
The mid-year budget comes up, and in January we'll know pretty much where we're at. And I'm hoping it's better than what we all think it's going to be. I don't think it's going to be very good.
What would be a rough estimate of a potential thing we might be looking at in terms
Oh,
of...
I see. I don't even know. That the auditor, controller, and admin are the ones that basically look at all those figures, and they're crunching them constantly.
Okay.
So they're very good at what they do. But yeah, no, I just have a feeling, looking at my budget, I'm pretty on track, with what I'm doing. But I just don't think the figures are coming in revenue-wise that they thought they were.
So we could see some significant challenges in
Yeah,
the next year?
Yeah.
Okay.
Just don't know how we're going to handle them.
Well, I guess that's up to mainly the supervisors, is that
Yes,
right?
they're supposed to make that decision.
Okay, okay. Other than that, are there any challenges that you see looking toward the future?
No, I think just technology. The governments have always been a little bit backwards. Private sectors have always been at the forefront of any changes. So I think we all need to step up a little bit. So I think you'll see that. I think it's going to be our biggest change, is going to the website and have a really good time getting around, trying to find things. Where in before it used to be pretty cumbersome,
Okay.
So yeah, technology is our main thing, I think.
And if people wanted to find out more, could they call the office? What's the number?
Oh, most definitely. It's 754-6350.
And then they can, of course, Google Treasurer Tax Collector, Calaveras County,
Yeah,
and then...
and they can even sign up for tax reminders.
Ooh.
And auction reminders. If they want to be a part of the auction, you sign up for an email, and I send out a blanket email to everybody. So
Very cool. Barbara, thanks for joining me.
thank you, Joe.
I appreciate it. And thank you for joining me on this edition of Inside View. I'm your host, Joel Metzger, and I hope you join me next time.